Welcome to the Explainer. In this one, we're breaking down how the pros really trade. We're going to crack open the playbook of an elite trader and get right to the thinking behind a multi-million-dollar strategy.
All right, let's just start with a number that's going to grab your attention. $2.5 million. I mean, wow. That was the record-breaking single payout for an elite trader named Jadecap. Now, a number like that, that's not just a lucky streak. That's proof that you're watching a master at work.
So the big question is, how do they do that? I can tell you, success like this, it has nothing to do with luck or some secret algorithm. No way. It all comes down to a completely different way of seeing the market, a perspective that lets them spot things most of us just completely miss.
And let me just be super clear here. If you're hoping for some magic indicator or a complicated chart setup, well, this isn't it. The real answer is way more fundamental. And honestly, it's a whole lot more powerful.
So what's the big secret, right? Well, it all kicks off with understanding what a pro trader is actually hunting for day in and day out. You know, the heart of this entire strategy, it really just boils down to one single concept. And this one concept is what drives pretty much every big move you see in the market. It's like the market's hidden fuel. And that hidden fuel is something called intraday liquidity. Okay, so what is that? Just picture these big pools of buy and sell orders, especially stop losses, that are just sitting there, clustered above recent highs and below recent lows. The market acts kind of like a shark, constantly hunting for these pools. This is the stuff that makes the whole engine go. This whole idea actually comes from the old school trading pits. You know, back in the day, Jadecap learned this from the veterans who told him that on the trading floor, you could actually see it all happen. You could see where traders were putting their stops, you could see the panic in their eyes, you could see where the big money was moving. You could literally watch the liquidity in real time. And that really just perfectly frames the challenge for us today, doesn't it? The game itself hasn't changed one bit. It's still all about hunting that liquidity, but how we see it, that's totally different. We can't see that panicked look on a trader's face anymore, so now we have to learn how to see it on a chart to anticipate where all those orders are just sitting, waiting. So here's the bottom line. Price is pretty much always moving for a reason, and it's almost always being pulled toward one of two things, like a magnet. It's either going for a pool of liquidity or it's moving to fill in an area of inefficiency. You can think of that as a gap in price that the market just wants to go back and fix. You'll often hear this called a fair value gap. But really, that's it. Those are the two big magnets. Okay, so this all leads us to a really simple, but believe me, incredibly powerful two-step plan. This is where all that theory turns into something you can actually use. And here's the plan. It's literally this simple. Step 1. You just wait. You wait for the market to raid a key liquidity level, like, say, yesterday's high. Step 2, you do nothing. You just watch what happens right after. Does the price push through and keep going, or does it fail and slam back down? The key is you are not predicting, you are reacting. And you know what? This is the exact mistake that separates the amateurs from the pros. The amateur trader, they see that high get broken and they immediately try to short it, trying to catch the perfect top. But the professional, they wait. They wait for the market to show its hand after the raid is over. That patience, that is the real edge. All right, so now we know the why. We're hunting for liquidity. We know the what. We're looking for that raid and reaction. So let's get into the really critical part, the when. This is all about timing your execution. Look, time of day is absolutely everything. A perfect setup at the wrong time is just a bad trade. It's that simple. And the data doesn't lie. For index markets, the real high or low of the day is often put in between 9:30 and 10:30 a.m. Eastern Time. If you try to jump in too early or trade during that dead lunch hour, you're usually just going to get chopped to pieces before the real move even starts. And if we want to get even more specific, a classic high-probability setup, let's say on a day you think the market will go up, is to wait for the price to first dip down and raid the lows from the Asian or London session. Think about what that does. It clears out all the early sellers. And then the New York session comes in and drives the price higher. It's a textbook liquidity hunt. Now, you've probably heard of all these different entry patterns, right? Things like a market structure shift or entering on a fair value gap. But it's so important to get this straight. Those things are not the strategy. They're just tools. They're what you use to time your entry after the main event, the liquidity raid, has already happened. Okay, so let's say you've done everything right. You spotted the liquidity pool, you waited for the raid, you timed your entry perfectly, and now the trade is going your way. Awesome. But now comes the part where so many traders mess it all up. When do you actually take your profit? And here's another huge piece of pro-level thinking for you. Instead of just stubbornly holding on for some perfect price target, a guy like Jadecap will often get out of a trade based on the time of day. So, for example, if it's getting close to noon and he sees the momentum starting to fade, he's taking his money and running. Why? Because he knows the liquidity is about to dry up and a winning trade can turn into a loser in the blink of an eye. Okay, and finally, let's talk about the single most important piece of this entire puzzle, the one thing that makes all of this work, and it has nothing to do with the charts. It's all about what's going on between your ears. Just look at this number. 35%. That was Jadecap's approximate win rate when he had that record-breaking multi-million-dollar run. Just let that sink in for a second. He was wrong on roughly 2 out of every 3 trades he took. I mean, that sounds impossible, right? How on earth can you make millions of dollars when you're losing way more often when you're winning? Well, the answer isn't about being a better predictor. It's about mastering the defensive side of the game. It's all about risk. And this is the professional's real edge. They are absolute masters of risk. They keep their losses incredibly small, tiny even, and they let their winners run. By doing that, they create this really powerful imbalance, this asymmetry. See, it's not about being right all the time. It's about making damn sure that when you are right, your wins are massively bigger than your small, controlled losses. So, what's the big takeaway from all this? It's that your main job as a trader, it isn't to be a fortune teller. It's not about predicting the future. Your job is to manage your risk and protect your money so you can live to trade another day. Because at the end of the day, in this game, survival isn't just part of the strategy, survival is the strategy.